God, I miss my 11-year-old boy. My son and I recorded this video back at the exact low of the COVID crash low, March 24th, 2020, because the New York Stock Exchange BPI did exactly what it just did yesterday. Enjoy. Now that the market has hit its first bottom, that's just step one in this process. The next steps are figuring out which sectors you want to be in. You want to be in the strongest sectors that are going to make the biggest gains on the way up. It's really not that difficult. It's actually quite simple. And to prove this, I've decided to invite a special guest onto today's video. I introduce to you...
Hi, I'm Lincoln Rowe. I'm this guy's son. In 2014, when I was 5, I remember the BPI was low, so that's when we buy. My dad told me to pick one of the 10 sectors. I chose technology. I remember sitting down with all of my money that I had, which is, I remember, around like $13. And then I invested that all in technology when it was low. And then it went up and I made money.
So there was 10 sector ETFs, the S&P sector ETFs. I told him to choose just one of those 10 sector ETFs. He chose XLK. We made him a stock certificate, and he do you remember how much it was? $13.82 or something like that, or 18 cents, right? And
yeah.
how did it perform?
It did 4 times better than all the other ones.
Yeah, on average.
On average, each one improved by like 27%, but mine improved by 110%. That's like 4 times better than all the other ones.
Yeah, and it's much better than the stock market itself. He's probably outperforming just about everybody who's watching this video right now. So just, you know, and I actually lost on the deal because I had to short the stock to him because you can't really put $13.87 into something. So I sold it short to him. Basically, I shorted him the stock. He has the certificate. And I'm never gonna cover my short. I'm just gonna let him ride with that. So congratulations, you stuck with the right sector the entire time, right? Technology, and we get updates on this sometimes, right?
Yeah.
And what do we do every now and then? We look at it on the computer.
Yeah, we look at it, see how it's doing, how much money we've made, and the last time we checked, it was like $64 instead of $13, and from just sitting on the couch.
And then the market went now the market went and now it's down to whatever it is, about $28 worth of something like that. But anyway, that's it. Thanks for joining us today. Very good. And if you would like to know more about how to, there's a strategy that I'm doing again because the BPI is low again. Right? That's why we initially went in to begin with. That's why I called him into the room and I said, listen, now's the time to invest. I showed him the BPI. I showed him that it was low. I said, this is when we invest. Pick a strong sector. And why'd you pick technology anyway?
I picked technology because I was confused in my 5-year-old mind, and I thought that...
5-year-old. Such a young age. Sorry, I didn't mean to cut you off. And then you found out that...
and then I thought that once you take the money out of the stock, then you could only spend it on that. And I was thinking, I like my iPad, so I want to spend it on technology when I get it out.
He thought if he bought a technology sector ETF, that means the money, when he gets the money back, he'd have to buy some technology, which is a lot more fun than buying industrials or soap or any of this other, stuff. Healthcare, right? You didn't want to buy healthcare back then. Oil, did you want to buy oil?
No, nothing.
Technology is more fun. You've probably seen the articles that I've been putting out. All last week, we were sending out articles saying, okay, demand is taking control. I showed you update after update. Demand was taking control. I invited you to participate with me on a strategy where the first thing we did was buy XLK, same thing that he bought. So now whoever started this strategy with me owns stock right alongside of this savvy investing guru / corporate raider investing genius.
Sure.
All right. So anyway, check out the video. There's a really cool strategy in it. You can still use it. It's a 4-part strategy that you can execute. And I think you probably could 5x your money or more. So, thank you. Say thank you.
Bye.
Bye. I've aged a little bit since then. That was, I guess, 5 years ago. And now we're looking at the BPI oversold and reversing back up. So it's giving you that same signal that it did at really every crash. And I know the chart looks kind of weird, the X's and O's. Most people have never seen a chart like that. So I created a line version of it. Remember, it's basically is the percentage of stocks that are on buy signals or versus sell signals. So it's just data. It's a number, it's a percentage. So I put it on a line chart here. So you can see on this line chart on the top, that is the BPI readings for the past 40 years. And below that, you see the S&P 500 for the past 40 years. And I matched up those green arrows whenever the New York Stock Exchange BPI does what it's doing right now. There's a green arrow. And so you can match that up below with the S&P 500 over the past 40 years, going back before the 1987 crash. So that first arrow you see on the lower left is the 1987 crash. You can match that with an oversold buy signal. Just take a look at this for a minute. This goes until November of 2023. In November of 2023, you got the same thing. I told everybody to buy a handful of protection safety equipment stocks. It's a sector, protection safety equipment. And most of those stocks exploded. I'll let you get back to the video and watch the next part of it. This is April 14th, 2025. But let's go back to a year after that 2020 COVID crash low and see what happens. All right, so we are doing an update video. It's a year later. So you just saw the first, what we did a year ago. We made a little video. It was the absolute low. We made that video for you on March 23rd, and we sent it out, and it said the BPI is historically oversold. And when the BPI is oversold, it's at these low levels. This is what I've been teaching my son. When it's at low levels, that's historically the best time to buy stocks. And then you find yourself deciding what should you invest in, where should you put your money. What you want to do is you want to focus on the strongest sectors, specifically the strongest sectors in the recent rally. So whatever was the strongest sectors leading up to that point, that's the sector you want to buy when the market's historically oversold. And to really drive that point home, to tell a story from another time when the BPI was very low and very oversold in 2014, I brought in my son, Lincoln Rowe, and who is now a year older, as you can see. So we're doing a look back, and why don't we start by telling them what you said a year ago on that video.
So I told the story of 5-year-old me. I bought technology stocks when BPI was low in 2014. I said I still own XLK, which is the technology sector, which was performing way better than all the other ones. And since we made that video, technology went up again, which is a lot more than other sectors.
Mm-hmm. So the sector that actually was the strongest leading up to right before the market crashed because of COVID was the technology sector once again. So, I mean, Lincoln dramatically outperformed all the other sectors by having his money in the technology sector, but then the market crashed. He was still up more than all the other sectors after the crash. But at that point, the BPI was once again historically oversold. And I invited you to a webinar the next day, and I told you we were going to be focusing on a specific strategy, specific stocks, namely the technology sector. All right, so we were following the rules. So March 19th at 9:30 at night, I told you demand has taken control of the market again. We were historically oversold. The BPI was saying to get in. And so the only thing we had to do was focus on the right sectors. We focused on the major technology sector. And then we narrowed it down even further to the software sector, and we narrowed that down even further to cybersecurity software stocks. And I told you that these tech stock or tech sector ETF call options would 5x or better. And using the strategy on XLK calls, we got 6.15x your money. With HACK, H-A-C-K, we got 11.4 times your money by buying those calls. And IGV, which was generally software, 9.95 times your money using that strategy. So again, all we did, we bought oversold market when the BPI told us to, and we just followed the rules. Sector activity, whatever's been the strongest sector, is probably going to be the strongest sector or among the strongest sectors. And so what's the lesson here?
Buy XLK or any technology sector when the BPI is below 20 or 30.
This would be true as long as XLK or the technology sector has shown to be an outperforming sector, one of the strongest sectors. So you want to buy whatever sector is relatively strong, and you of course want to buy it when the market is historically oversold. Good job?
Mm-hmm.
Keep this one?
Yes.
All right, cool. All right, thanks. What a cutie. Not so much anymore. Here's him now. Actually, this is just a few days ago. Well, what do you think off the top of your head?
What?
What do you think you should say off the top of your head?
I think I should say that I'm back in. I've been saying it since I don't remember how old I was, like 8 years old, and I called the last one perfectly. And I'm saying it
When
again.
you were 5, we saw that the BPI did something cool, so we said, what do you want to own? Pick a sector.
Yeah, and I think
Right.
technology, which outperformed every other sector.
Mm-hmm.
And then again in 2020 or something like that.
Mm-hmm. Your COVID low.
Yeah.
You pretty much called the COVID low,
Yeah.
and you were 11. You can see I'm recording, right?
Yeah.
Yeah, so don't be shy.
Then
Definitely 2020. I just watched that video.
yeah,
But I think you also did one back in that room where you had like bullet points.
maybe. I don't know.
So we have 2 videos with you. This is the 3rd. Now you're a grown man.
Kind of.
So what did you do today?
Um,
Now that the BPI was down at like 23 or something.
I put 900 in.
Mm-hmm. And what'd you buy?
QQQ.
How many?
2 shares.
Yep.
For 450.
Mm-hmm. And you bought it actually at the low of the day.
Yeah.
It rallied into the end of the day, into the close, and it's Friday after the market sold off. And typically what happens, Friday, if you're seeing a big rebound, especially into the end of the day, Monday, you probably see a big spike. Yeah, follow through. And everyone's going to feel like they missed the big move because they're calculating from the exact low. So they'll stay on the sidelines and wait for a pullback. And then a lot of time they don't get that pullback. But when the BPI is this low, just close your eyes and buy, pretty much. So if you're going to say 3 things, 3 bullets, what are they going to be? Take your time, think it through.
Market timing is the least important. When everybody's panicking and selling, don't just follow what everybody else does. And just buy a dip.
Yeah, so what do you follow if you're not following what everybody else does? What are you following?
BPI.
Yup. Granddaddy of all technical indicators. So if market timing is the least important out of the 3, what's the most important?
Allocation and risk management.
Yup.
Number 1.
Mm-hmm. Allocation is almost tied for first.
Yeah, with risk management.
Market timing is way far third.
Yeah.
Way back there. So is that, there's don't follow the herd, follow the indicators.
Mm-hmm.
And what would be the last thing?
I don't know, just don't panic.
You know, we're not we don't predict or forecast, right? We're not saying the market is at its bottom, but this is a damn great place to buy it.
Yeah.
And maybe you'll make a double bottom, who the fuck knows, but. All right, cool. Okay, so that's pretty much it. This hasn't happened since the COVID low 5 years ago. Can you believe it's been 5 years? That was 2020. Prior to that, the 2015 mini crash, we had this opportunity. Prior to that, the 2010 flash crash. It's almost every 5 years. Then, of course, it was 2008. 5 years before that, it was the oversold tech bust bear market low, March 2003. We have that opportunity right now, and I hope we take advantage of it. Also, I want to be a big buyer at these lows of the stocks that are standing strong, like a stone pillar in Rome when the market's getting cracked. QBTS comes to mind. QBTS is a quantum computing company. It's a company that really did not get the memo about the crash. Stocks stood strong. Stocks actually gaining strength. It went higher. It's called D-Wave. But again, it's QBTS. You see it on your screen here. You can see that it's going higher on heavy volume. They're piling into this stock. They're buying the crap out of this stock, even though the market's crashing. So what do you think is going to happen when the market rebounds? Like, what do you think is going to happen to that stock over the next 6 to 12 months? I think it'll multiply 3 to 5 times. And on the webinar, I'll show you 3 other stocks that I think are going to do that, have the potential to do that before the summer even starts. So I hope to see you there. Again, that's majorbottoms.com. If you do want to see these videos regularly, we publish them on truemarketinsiders.io/media. So truemarketinsiders.io/media. If you go there, you'll be able to, if you'd like, you can enter your phone number and we'll send you a text message alert as soon as the video comes out. There's a lot of timely trade ideas and things like that there, so you won't miss a beat. Also, below that video, when you sign on, there's a watch list that you can create, and you can use an urgency indicator. I'll explain it on this webinar. You can also just use majorbottoms.com. Yeah, I strongly recommend you do that, because I don't think you're gonna have another opportunity like this for another, I mean, if history is any indication, it's probably another 5 years or so until you have a nice market crash like this, where you can make very quick, very obvious, very easy money. Also, we have a YouTube channel. It's Chris Rowe Show. So if you want to sign up, if you use YouTube, subscription is free. YouTube will always just tell you whenever we post anything new on YouTube, if you want to subscribe to that. If you're watching this video on YouTube, then check the description for links to learn more. Like it, subscribe to it, comment on it, ask questions, I'll answer them. Get to the webinar, we will forward that link to the recording of the webinar. I just don't think you want to wait to watch this webinar. But yeah, it will link to the recording of the webinar after it's done. So it's pretty much it, all right? Talk soon. Hope to see you there.